Welcome back to another episode of the Me and Money podcast. We're here to talk about health sharing plans today, which a little bit different from what we just talked about with HMOs and HSAs and employer health plans. And these are things that I honestly hear about quite a bit just in my circle, especially with younger people who are thinking about starting a family. Childbirth is a very expensive process. And Elliott, I know you recently had some interest in this topic too. So, why don't you just share with the audience what led you to say we should record an episode about this?
Yeah, I think it's one of those things where healthcare is very expensive these days. I think we're all feeling the pain of that, whether it's in our monthly premiums, it's in our out of pocket, it's in deductibles. I mean, you read stories online about families of four that are paying thousands of dollars a month for healthcare, and it's not really providing a lot above and beyond that. And what I mean by that is they're still paying a lot for healthcare when they actually go to use it, and they may be out of pocket $20,000 or $30,000 in a year before their insurance actually starts to kick in. So what has popped up the last few years is something called a health sharing plan. And I think the first thing I'd say about this is it's not health insurance. So it's not regulated like health insurance. It doesn't provide the same guarantees as health insurance. It's not health insurance. And I just want to repeat that because I think when you go on and you read online about these health sharing plans, it will read a lot like insurance, but it's not.
Yeah, and a lot of times too, like especially for those who don't have insurance, they view this as insurance, right? Like this is the thing that's there to be that line of defense on either retaining a specific amount of costs or hopefully mitigating a lot of expenses and costs when it comes to healthcare. But you're absolutely right. Like you will still have a contract, like an insurance contract, but it is definitely not insurance. So, just starting there, Elliott, like what are some things that maybe as people are exploring these options, if they are interested in something like a health sharing plan, like what are some of those red flags that you're seeing and you want to draw out to really reinforce that this is not insurance?
Yeah, the first red flag I would say, which is the thing that people are most attracted by it for why people are going to it, is cost. When you look at the cost of a health sharing plan versus a health insurance plan, the cost is significantly lower for a health sharing plan just because it's not providing all the different things that a health insurance company would. And I'm not here to advocate for health insurance companies either. There's a lot of issues in that industry. But oftentimes when you're looking at a health sharing plan, they're going to have maximum amounts that they'll pay per year. And sometimes that amount is very low. Sometimes they'll have exclusions for certain procedures or for pre-existing conditions. So it's pretty common if you look at them for 1 to 3 years, they won't cover any sort of pre-existing condition. So if you went to the doctor and you talked about you were having issues with XYZ and then you need surgery for XYZ in those first few years or whatever they say, it's not going to cover it. And it's important to keep in mind that a lot of these are faith-based or biblical type organizations where you as a member are agreeing to abide by certain rules. And so if you don't, or you just sign up and you decide to go for it, certain things might be excluded, like sometimes mental health type care is excluded. Sometimes women's health, such as pregnancy, pills, IUDs, that sort of thing can be excluded. So there's a lot of things out there that are potentially excluded that are in the fine print that don't necessarily show up on the bright, shiny page that has the low cost with it.
Yeah. And I think that's a really important thing. Like if you're new to the podcast or maybe this one caught your eye, I'd really encourage you to go back and listen to our prior episodes about insurance because, again, this isn't insurance, but when you think about how these plans are structured, right, low cost, it's low cost for a reason, right? And like you said, there's either exclusions or perhaps there's certain criteria or pre-existing conditions or you can't use over X amount of benefit in the first year, right? So that's one of those things where it would be akin to like getting a really, really cheap car insurance policy that doesn't cover, rear end collisions under 5 miles per hour or something wacky like that, right? And they can do that with these policies because they aren't, like you said, regulated, right? And I think a lot of people, if they knew that, right, if they bought that car insurance, that didn't include rear end collisions under 5 miles an hour, like that still can be a really big bill at the mechanic. Anything car related isn't cheap these days. And, same point with the healthcare, right? Where, you really just have to understand what isn't covered. And I've seen some of these policies too, where, like if a lot of people tend to use them, at least when I've seen people implement these, like when they are thinking about starting a family and they're really concerned about, either a challenging pregnancy or, there's a high risk pregnancy or something like that. And a lot of these policies, like you said, like if you're pregnant when you come onto these plans, it may not be covered. And what they're trying to prevent, right, is people coming on for 3 months, paying 3 months of dirt cheap premiums, using up all the benefits and leaving, right? And that's some of the risk that they have as the people providing the benefits, right?
Yeah, or if you're not married when you go on the plan and you're having a child, it may not be covered either. So just understanding those exclusions is important. But I also think it's not underestimating to the odds of needing care. And what I mean by that is I think a lot of us walk around thinking, hey, I'm relatively healthy. I probably won't ever have a hospital bill that's a few $100,000. But if you go read online some of the horror stories around these companies, you'll find plenty of stories online, either in news, Reddit, online forums of, hey, I was on this plan, I was paying $200 a month, and then I needed this really big surgery. I got a bill for $250,000, and the health sharing plan only covered X dollars, or it took months. I mean, that's the other common complaint is it may take months, 4 to 8 months. I was reading the story before where this guy had surgery, and it took a few weeks for them to make a determination, and then even more months to actually get paid. And a lot of times what happens in the meantime, your bill goes to collections,
Yeah.
and that can then ding your credit and more. So it's one of those things where I wouldn't, it's tempting to go for the lower cost thing, but it's really opening you up to a world of hurt if you actually end up needing to use it in a severe situation.
Yeah, absolutely. And I think that's, you bring up some really great points there. And I think those are questions that you as the listener can ask, if you are interested in these style of plans or coverages, what is the claims process? Like, how long on average does it take you to make a determination? What do I do in the meantime if I have a giant bill and I can't afford to pay it? Like, how can you work with me and help in that type of a situation, right? And yeah, I mean, those are just really scary things. And like you said, right, I think a lot of people think about the expenses like either right after or while they're happening, but it's one of those things where I don't walk around thinking I'm gonna, step into a crack and break my ankle or break my leg or something or fall on the ice. I mean, there hasn't been much ice here in Wisconsin this winter, but it's still out there. So it is a tricky thing, and that too, it's like any insurance, right? The time you want it the most is when you need it, and if you don't think you need it, you almost never want it, right?
Yeah, definitely. And it's one of those tricky things, but I don't know. I just encourage you to go read about it, read the horror stories, read maybe some good stories too, but also recognize that a lot of people are using the plan for a long time without having those really horrible things go wrong. And you don't really test something until that horrible thing goes wrong. And look at, I would say certain states as well have sued a lot of these carriers to stop them from selling, I'm going to use air quotes here, policies inside of their state, because it's not technically insurance, but it's sort of being represented as insurance in a lot of ways. So, for me, that's just going back to the red flag question. When states are suing them, there's horror stories online. A lot of things are being written that aren't great about them in investigative journalism. It gives me pause to ever consider using them just because they're not regulated. You don't have the same guarantees.
Yeah, and I think that's a really tricky thing too, right? I think a lot of these sort of propagate off of, social selling, so to speak, right? Where
Yeah.
maybe, oh, my friend had this and they didn't have any problems. Well, it's kind of like, my friend has these investments and he doesn't have any problems, right? Like, does it apply to your situation? And I've seen this too, where, sometimes, like, especially when I was living in Dallas, there was often only one spouse working in
Mm-hmm.
a family. And a lot of those policies, if you have the ability to be on your spouse's healthcare plan, they will not cover certain things. Like even if the spouse is electing to be off in an attempt to try and get, this coverage, which is cheaper and going to pay for, all the birth related expenses and those kind of things. So yeah, absolutely. Like I think be cautiously optimistic about how these things work. Like they can be really great for people, but I think you're right in having that, be skeptical first and not just automatically trusting when it comes to, what someone else's experience was, or what the reviews say, or what their sales copy on their website says, right?
Yeah, definitely.
Yeah. Any other like items you'd want to talk about on this topic? I know it's kind of a niche topic, like,
Yeah.
but it is something that's out there.
Yeah, I don't think I have anything major. I would say if cost is a huge concern too, like I think a lot of people sometimes don't remember to go look at the ACA plans and what sort of subsidy can be out there for that. So I might just sort of throw that out there that might be something to consider, because I think that's still a missed opportunity for a lot of folks.
Yeah, absolutely. And you know what, Elliot, maybe we should just go in on that a little bit, with the premium tax credit and how that works. I mean, that was something I certainly took advantage of when I was single and started my business. Like I started in the middle of the year. I didn't have a ton of income to show for that tax year. I knew I wasn't going to be like massively profitable in the first year of starting a firm. And so that was something where I actually, like, half of my premium was paid for by that premium tax credit, which is, for many of you listening, like one of the rare tax credits that you actually get paid in advance. Now,
Yeah.
my caution to you there is if you do expect your income to either go up, or, perhaps you're not working the first half of the year, but then you start working again the second half of the year, like, you need to be mindful that if you exceed those income thresholds, or your income starts to rise, that you will owe some of that tax credit if you, A, don't update your income on the, healthcare.gov website, or B, like, just have a lot of income that you weren't planning on, right? And
Yeah,
so,
you'll essentially pay that back.
yeah, it's like a tax bomb that you benefited from in the beginning, right?
Yeah.
And so that is something too, where even, if you're thinking about this as a bridge for, either employment or something like that, versus the health share plans, the Affordable Care Act is actually a really strong place to start in understanding, especially if you're single. Like, I think it's much easier to manage and stay under that income limit if you do have, a bridge in employment, or a gap, I should say, not a bridge in employment, to get a real health plan that's actually insurance and is regulated and will be accepted by whatever health system you're a part of.
Yep.
Yeah.
Yeah. Good points.
Yeah. I'm sure do you see a lot of that in retirement too? I know health share plans probably aren't really aimed at the retiree demographic all too much, but is that a big question? Do you have any retirees looking into those style of plans, or are they typically trying to make use of, healthcare through the government if they are retiring before Medicare age?
Yeah, occasionally you will, particularly before Medicare age, people looking at options. And again, it comes down to low cost, right? Health insurance is not cheap. And so if you're going from your employer's paid a good portion of your premium during your working years, and now you go into retirement and you're like, wow, I didn't realize that my health insurance plan cost $1,000 a month and I was only paying $200 or $300 for that. Sometimes there's that pause where they think, well, what are my other options here for lower costs? And some people do go on the plans. I would say not people that I'm working with generally, just because it's, again, as you can probably tell, I'm pretty negative on the health sharing plans just because they're not regulated like health insurance, and there's a lot of pitfalls with it. But I do read stories online about people who do end up going with them. And sometimes it's a short window where it's 2 years or so and they make it okay. And sometimes it doesn't work out so well.
Yeah. Yeah. And that's the thing, right? I really view some of these as like you're almost walking into a casino and rolling dice on, like, whether or not this is going to be covered and how much of it is going to be covered. And just like the casino, like, the government doesn't care if you lose money at the casino, right? Like, these are not regulated policies. Like, casinos are probably more regulated than health share plans. So, if that scares you away and saves you some pain, like, please hang on to that fact there.
Yeah.
All right. Well, that's all I have for this topic. Are you?
Same.
All right. Well, it was great chatting with you, Elliot, and talk to you next week.
Sounds good, Matt.